no growth model. We are discussing the growth models which are called dividend discount models to evaluate common stocks. Here we'll discuss what is called the no growth model or constant dividend model. We have discussed that the process of valuation of common stocks is the process of calculating the intrinsic value of common stock. And technically, intrinsic value is the present value of all the dividends and the cash flows a stock will generate in the future. Again, using the going concern assumption that the business or the company will continue to operate forever and its operations will not be discontinued in the future, we assume that the dividends of common stocks will always be received or will be received till infinity. Now, in the first assumption, when we say that the dividend will not grow, we say that the amount of dividend that was paid in the last year will always be the same. This model becomes very much similar to preferred stocks in terms of the amount of dividend and the constants of dividend. There are some assumptions of this model. Let's see what these assumptions are. Number one, all earnings are paid as dividend. If a company retains some amount of profit, then that retained amount of profit will increase the amount of dividend in the next year or will grow the dividend in the next year, and hence the assumption of not growing the dividend or no growth will not be valid. The second assumption is that external factors remain constant, meaning that the political conditions, the economic conditions, the social conditions, the money supply, anything that externally affects a company's profitability, we assume that all these factors are constant. So it is only the internal factor which causes growth, and that internal factor is retention of profit. That is, earning capacity remains the same, which means that the capability of a particular business to earn a certain percentage of profit on investment also remains constant. And so, lastly, we assume that then growth is the function of retention. यानी आसान अल्फाज में हम यूं कह सकते हैं कि डिविडेंड के अंदर अगर कोई ग्रोथ या इजाफा होगा तो वो सिर्फ इस वजह से होगा कि अगर कुछ प्रॉफिट को कंपनी रिटेन कर ले, और अगर कोई प्रॉफिट रिटेन नहीं किया जाएगा तो डिविडेंड कांस्टेंट रहेगा. In no growth model, the amount of dividend remains constant. And this dividend, because of the going concern assumption, is expected to be paid till infinity. So like the preferred stocks formula, we'll also use the same perpetuity formula that we learned earlier to calculate the present value. So the intrinsic value of common stock with an assumption of no growth will be the present value of perpetuity, which is PV is equal to installment over discounting rate. And here this intrinsic value formula will be transformed into V is equal to D over R. It is very important to remember that here D is the amount of dividend and R is the required rate of return. Let's have a look at this example and try to understand how a common stock with no growth is valued. If par value of a stock is rupees 10 and it is currently selling in the market at rupees 11, the last year's dividend, which is D naught, is 2 rupees per share and our required rate of return is 17%. What will be the value of this common stock? So we apply the formula V is equal to D over R, where D is the amount of dividend, which is 2, and R is the required rate. In this case, it is 17%. So dividing 2 by 17%, we get the intrinsic value of this stock equal to 11.75% rupees. Now, what we need to do is to compare this value with the market price and make our decision. So the analysis is that last dividend will be the future dividend. So that is why it is constant. And because market price, if it is higher, then we will not go for the purchase of this share. But in this case, if we see that the market price is less than the intrinsic value, market price is 11 and the intrinsic value is 11.75. इससे हमें ये पता चलता है कि वो शेयर जिसकी असल वैल्यू ₹11.75 होनी चाहिए थी, वो इस वक्त मार्केट में 11 रुपीस का बिक रहा है. इसका मतलब है कि ये स्टॉक अपनी ट्रू वैल्यू या अपनी रियल वैल्यू से कम पे बिक रहा है. So it is very important to understand that how do we make use of intrinsic value to make investment decisions. जब भी कोई स्टॉक अपनी ट्रू वैल्यू यानी इंट्रिंसिक वैल्यू से नीचे मार्केट में बिक रहा है, तो इसका मतलब ये है कि इट इज़ अंडर वैल्यूड, यानी ये मार्केट प्राइस अपनी ट्रू प्राइस से नीचे गई हुई है. और ऐसी सूरत हाल में दैट इज़ द राइट टाइम टू परचेज दैट स्टॉक. We also purchase a stock which has the market value exactly equal to the intrinsic value. Although it is very rare, but even if it happens, we recommend purchasing the stock, because in that case an investor would purchase that stock at its true value and the investor will not be at loss.